paying tax. Of course, the woman that is selling akara by the roadside is not registered now. Like,
Yeah.
or let me say, might not, have a company that is registered using
With,
CAC and all of that. Are they taxable?
okay.
Based on your definition, they are taxable
Yeah.
because they earn. But I don't know if they are part of the exception. How is the government making sure they are paying tax?
All right, we are still going to get to what we have a threshold. If we calculate that chargeable income for the year, and that chargeable income is not up to 800,000, they are not going to pay tax. We are still going to talk about these exemptions. 800,000 being exempted.
Are you,
But
sorry,
I
the
want to
800,000, is it the profit that you are talking about, or the whole money, or how? Is it from the profit that you calculate,
we have what we call, we have what we call accounting profit. We have what we call a profit of the business. But this profit, after we deduct all something we call eligible deductions, liable expenses, and all other relief they are entitled to, amounts that remain as part of their profits. The first thing is the profit of the business. So after we deduce all the eligible deductions, liable allowances, and all other relief, like for to leave allowance if it's applicable to the person, the amount that remains is called chargeable profit or chargeable income.
Let me help our people, because your terminologies are big. Let's say I have a company. I employ like 3 people. I pay their salary. I pay all the raw materials, the capital, and all of that. What I have as a profit at the end of the year is what you are referring to, right?
Yeah, the profits at the end of the year.
Okay.
And that profit at the end of the year also eligible for some deductions and relief in tax law.
Okay.
After you've already accounted for those ones in businesses, and we see under the tax law that, okay, these things are eligible, and they are normal. And then we also have some other relief that we can also provide for you. We have what you call NHIS if you make contributions. We have what you call NHIS, NHFC, all those ones, and also have what you call rent relief allowance. Okay. So if all that, after we remove all that from that profit you mentioned under your businesses,
the final profit.
Upon that, that's what we call chargeable profits.
Okay, so what will make it to be chargeable? Like, what threshold will it reach for it to be chargeable? I'm running a business now. How much profit, like all these terms that you have used, we have deducted everything, blah blah blah. Now, how much is it going to be that I should make as profit in a year for it to be taxable?
Okay, the difference between taxable and chargeable. So, so I have to highlight that.
Please do.
I mentioned earlier, income, profit, these are things are taxable. Something that we can subjected to tax, which we refer to as a tax base. What we are taxing, income we are taxing, is what we call taxable income. Okay. But the portion of that taxable income upon which we appropriate the tax rate on is what we call chargeable. What we are charging. Are you getting what I'm trying to say? So that chargeable, that income we are charging to tax, we are portioning the tax rates to, is what we refer to as chargeable income.
Let's help ourselves this way. I have ₦1 million for my business.
That's the profit to make?
No, like, the amount I put in the business.
Okay, that's capital.
Everything, that's the capital.
Yeah.
Okay. Then I make profit of ₦1 million.
Okay.
So what is taxable income? Then what is chargeable income? It is the capital plus profit, making 2 million now.
The capital is out of the this thing. It's not taxable. It's not income. It doesn't even
profit.
It's the profit. That profit that you make, which is 1 million, that's what we call taxable income.
So now, let's say on 1 million, I pay 100,000. That is the chargeable, right?
That's not chargeable. Let me now explain.
This thing is
it's not. So right. What we mean by chargeable income? When we say that 1 million is your profit.
Yes.
So this 1 million, there are some other relief that you are also entitled for. For instance, if you pay the rent in a year,
let's say I've removed every payable, the money that I see that, wow, I've made profit, without even saying, I see something I want to pay. Let's say it's 1 million.
Okay.
You get it. You get the illustration now.
So now this 1 million, if all this thing has been deducted, that 1 million will become your chargeable. It is possible your taxable income is your chargeable income.
Okay.
You understand what I'm trying to say? That's if you already say, okay, you are not eligible for any of these things. The only thing that is available is your profit, and all other relief or allowances are not available.
Okay, so, but we first of all talk of taxable
before chargeable.
Before saying
chargeable. So what I was trying to explain earlier is that part of this taxable income, part of this taxable income, the portion of it that we charge to tax is what we call chargeable income.
Yeah.
So if part of 1 million, if 1 million, that's the profit to make. At the end of the day, we ask, okay, out of this 1 million, it's only 500,000 naira that is chargeable income. So upon that 500,000 naira, that's what we are going to charge to tax. So if we are not charging it to tax, now we also look, does it meet a threshold of 800,000? We see, okay, the total profit to make is 1 million, and after we deduct all the deductible, we see that the amount that we should charge to tax is 500,000.
Sorry, my 1 million profit is could be the taxable
income. That's your taxable income.
Part of it will still be like chargeable.
Part of it, that's the part. Some will be relief. The minimum one that remain is what we call chargeable.
Okay.
So that chargeable part of that income that we only charge to tax out of 1 million, we now say, okay, all the 1 million is not everything that is chargeable. It's only 500. Okay, this 500, that's what we are going to charge to tax. Now, the chargeability.
Is it because out of the 1 million, there are still some things I want to settle? That's why it is not, what is it called? Is that why it is not chargeable? Like, is that why the old 1 million is not chargeable? Okay,
let me break it down. Let me break it down.
Please.
All right. So let me take it from here. Let me just give you an analogy.
Okay.
You do a business. When you do your business, you incur total sales you make. Let's say it's 10 million. The total sales, all what you sold.
Was the capital?
No, the capital. We are not talking about capital.
Okay.
We are talking about the operation. Capital is out of the definition.
Okay.
What I'm trying to say is that, okay, what you sold during the period is 10 million.
Okay.
Are you with me? So out of this 10 million, you incur some costs in buying some things. You incur some costs in paying some services. After everything, we say, okay, total costs you incurred. That's what you are referring to as capital initially that you mentioned. Okay. All the costs you are incurring, we deduct it from there. Let's say all the costs you incurred is 5 million. Okay. Removing 5 million from 10 million, what we mean is going 5 million. All right. But for better understanding, let's just say all the expenses we incur is all the costs incurred is 4 million. So that 5 million is not going to be okay. So let's just say all the expenses you incur is 4 million. So 6 million there as your profit. So this profit, there is still some other things that under the tax, they give you as relief.
Okay, that don't worry about this.
For instance, you are making a contribution to NHIS.
So, sorry, the whole 6 million become taxable.
It's become taxable. That's what we call taxable income.
So after the relief,
all the enjoyment under taxable, we now talk of chargeable. So
can you give me examples of like those relief?
I mentioned something the last time, rent relief allowance. Rent relief allowance is the sense that, okay, rent relief allowance is what we call 20%. The lower of 20% of the annual rent you incurred, or 500,000, whichever one that is low.
Like, okay, you paid for rent.
You pay for rent.
So out of 20%, don't worry, it won't be part of what we want to charge you, tax you for. Is it like that?
Let me explain better so that you'll be able to understand. Right. So you pay rent. Let's say the rent you paid is 1 million.
Okay.
1 million. 20% of 1 million. That's how much?
That should be 200,000.
That's 200,000. So we are now saying, okay, the lower between 500,000 and 200,000. That's what we are going to. We are not going to relieve you on the total rent you incur.
Yeah, I get it.
It is only the 200,000. So we are now removing that 200,000 from your profits.
That is still the same thing I'm saying. That 200,000. Don't worry, it's not part of what we are going to charge.
We are going to charge to that. So if we now remove that 200,000 out of 6 million that we have 5,800,000.
So gradually we are coming to
reducing. We are coming to chargeable. After all these things,
that's the explanation I want.
After all these things has already been settled, the amount that remain is what we call chargeable income.
All right.
After we now see this chargeable income, now see, okay, this is chargeable. Let's say after every deductions, amount remain as chargeable gain is what we call 3 million.
Okay.
After we've already deduced, after we've already removed the 6 million, from 6 million, the amount that remains is 3 million. Okay. So this 3 million is what we refer to as chargeable. Okay. On this chargeable income, that's what we are going to tax. We are going to apportion our tax rate. Okay. You now see, government now saying, under the previous provision, it is only employee that earn at or below the minimum wage that are exempted from tax.
Okay.
But now, government is now saying, it is not fair. Why is only employee? Why other people that are earning from other sources of income? But we are not relieving them. Let's relieve every low income earners, irrespective of your sources of income. Let us relieve you. Let's provide this relief. Okay, anybody that is having a chargeable gain in a year of assessment that is less than or equal to 800,000, let's say 0% tax rate, they are not going to pay tax at all. 800,000 out of that 3 million is also chargeable, but their corporate tax rate is 0%.
All right.
So out of this 3
So they
million,
are paying 0% of that amount.
they are paying 0% on 800,000 out of that 3 million that remain. That's which we consider as chargeable.
Okay.
You know, we have already, okay, this is what we want to charge to tax.
This based on our
previous the explanation. This is what we want to charge to tax. That's 3 million.
But the implication is that the person is not paying tax for that, right?
It's going to pay tax.
Okay.
First 800,000 out of that money. First 800,000 out of that 3 million.
Okay.
We are not going to pay tax on it.
Okay.
Amounts in excess of that 800,000 will be charged to appropriate rates on progressive rates.
Are you saying